Kapil Shah, who is joining us on the show right now. Kapil, help us firstly with your take on the markets. It's been a smart recovery from the day's lowest point, but do you see Nifty crossing and sustaining that 25,000 mark as we approach towards the monthly expiry?
Good afternoon, everyone. So, from past 30 trading sessions, we have been seeing that the market is trading in the range 25,200 on the higher side and 24,500 on the lower side. But within that particular thing, there is one micro range which we are seeing that 25,000 as an upcapping thing and the 24,800 as a lower band support that we are seeing. So, today also the market has seen some sorts of reactions from the 25,050 also level, and this particular level from past 10-15 trading sessions, at least 4 to 5 times market has reacted from this particular point. Yes, the market internal strength is quite good. After seeing some sorts of setbacks, we have seen the recovery. Mid caps are covering very fastly. They are trading on the positive note. So eventually, yes, this is what a matter of the confirmation that we have to see to make a little bit more bullish tone on the market. But 25,000 is the one particular level that we are seeing that okay, once the sustainability over there we see, we can have the further view. But we are waiting for the 25,000 sustainability on that particular point.
So those are levels that Kapil is watching out for. But Kunal and Kapil, now time to get some of your closing trades, mid-cap ideas for the day. Kunal, what about you? Where are you placing your bets?
So in terms of the closing trade, I would look at Tata Power. I think that's a chart which is looking attractive in terms of risk reward. We've seen power stocks slowly and steadily, seeing some bit of buying. It emerged with Power Grid. Then I think last week we saw Power Finance sector also starting to look up attractive. So now I believe that Tata Power could also come back into a momentum as well as a turnaround mode. At current levels of 390, the risk reward is attractive for traders to go for a fresh buy.
All right, but Kapil, what about you? Which are the stocks that you are eyeing?
Here, eyeing on the Grasim, which is trading at a 2730 level. Technically, the stock has been a positive momentum. Then there is some sorts of declining momentum is happening. But now the things are gaining its ground. So we are seeing some sorts of a bullish continuation sign right now, the 2730 level with a 2675 is in stop loss that we are seeing, and about to that the target potential we are seeing that 2850 will be the first upside potential.
Okay, so lots to watch out for. Grasim is something that Kapil is liking at the moment. On that note, we'll slip into a very short break, a quick one, and we'll be right back to get more of Sunil sir's thoughts on where the markets are shaping. Hi there viewers, welcome back to Closing Trades. Let's talk about the last half an hour of trade, and before we talk about our markets and the recovery that we've seen, there's another spot of recovery that we're seeing and we're tracking very closely right now is the US futures as we speak, because what a recovery we've seen from the deep shade of red that we were seeing on the futures in the first half of the trading day. You have a Dow that's now slipped into the green. In fact, S&P and Nasdaq also these futures are in the green right now. Dow futures up 0.1%, S&P futures up 0.2%, and Nasdaq futures up 0.3% right now. This despite the escalation that we are hearing about in the West Asian region. European markets too are not doing all that badly if you take a look in today's trading session. Let's pull up some of the European markets if we can, and well, Stock 600 is down 0.1%, but you have FTSE that's absolutely flat, and DAX and CAC are down 0.2%. So it's not all that bad when you take a look at the global backdrop. Sunil sir, just on that note, I wanted to get your perspective on the kind of market reaction that we're seeing, especially in front on the US futures front. Do you believe that this escalation is now largely being priced in by the market and not much can go wrong from here, at least from the market point of view?
Because the US was also threatened for the strike. So what it means is that the likelihood that Iran's defensive capabilities gets crippled, because I think Israel is also now attacking their missile bases after attacking the nuclear bases earlier. So I think that what it means is that I think they see this as that Iran has not much choices, and that enough pressure could be brought in through China on the Hormuz Strait issue. I think markets are reflecting that because I think almost entire Iranian production is sold to China. So clearly China is an important factor there. So I think what the markets are realizing is that the surprise action by the US and the threat of further action would probably keep this from escalating, because Iran is getting crippled, day by day by these joint strikes. So I think that's where even oil prices, if you see, They were already at a 74, 75 levels, and today there was a fear that they would cross 80. But even with the threat of a Hormuz closure, they've stabilized at around 76. So I think overall the world is absorbing the fact that US will ensure, I think, by further attacks that actually Iran may not be able to do much. I think it's a kind of a read that's happening. And to that extent, I think the world has also got used to these geopolitical shocks. So no longer are the reactions as extreme as we saw when the first Russia-Ukraine war broke out or when the first Hamas attack happened on Israel. Now the reactions are far more subdued because people are realizing that these things don't last very long. So I think that's the fact that the market expects that maybe in what couple of weeks or a month or so, this situation would be behind us. So I think market is tending to read into the future. And as they say, right, you buy on the rumor and sell on the fact. So the fact that the action has happened has eased the thought processes of the market a lot.
All right, with this, we let you go on that. Mr. Subramaniam, thank you so much, as always, for taking the time out and speaking with us and also giving us a sense what to make of the rise in the geopolitical tensions as well as its impact on the markets. But moving on then, and our correspondent Priyank has been covering all angles of this developing story from Tel Aviv. Let's go across to him for the latest. Priyank?
Explosions were heard here in Tel Aviv, which clearly means that the situation is certainly difficult and more serious this time. Let me show it to our viewers because we are in the heart of the Tel Aviv, and as you can see, these vehicles are stationed. They are not moving because of the the air siren alert which has come up, and these high-rise buildings are certainly the prime target for the Iranian forces, because over the period of last few years, months, what we have seen after a barrage of missiles which has been fired towards the Israeli side, that ballistic missile has come up as the biggest threat, because the Israeli air defense system is certainly not somehow capable enough to deal with these kind of ballistic missile, although the small drones and small missiles could have been dealt, which were fired from the Hezbollah side. So reporting from Tel Aviv, what we can tell you to our viewers, that you can imagine a city which is certainly silent. No one is on the road, obviously because of the air siren alert. But I could personally hear 4 loud explosions. We are yet to verify the location where these explosions has happened. But since morning, this was the second alert which came up.
Okay, Priyank, thanks for taking us through everything that's been happening and all the action from the ground. Let's also welcome Sunny Agrawal, Head of Research Fundamental Desk at SBI Cap Securities on the show right now. Sunny, hi, good afternoon, and thanks so much for joining us on the show. Give us a sense of what you are making of the market move, given that we have seen a spike up in gold, but it's not a flare up like Nikunj was mentioning in the morning. And also, other than that, gold has softened. One would expect the opposite reaction given the geopolitical backdrop right now. What are you making of the market moves?
Good afternoon, everyone, and thanks for having me on the show. I think the uncertainty pertaining to the tension between Iran, Israel, and US seems to be waning off. The reason being that the motto of US and Israel was to stop Iran from pursuing the nuclear ambition, and since most of their facilities has already been damaged by US, and US has been on record to say that unless and until Iran retaliates significantly, I think they are not very much keen on further attacks on Iran. So I think this event is already being discounted by the market, and in case there is no further major escalation between Iran, Israel, and US backs off from all this chaos which is going on, then we feel that uncertainty is behind us for both equity markets as well as precious metal like gold. So that may be one of the reasons that gold is trading soft in the trade today. Coming to equity market, again, we believe that market continue to remain buy on dip kind of market, wherein any dip due to this ongoing geopolitical tension should be taken as an opportunity to accumulate quality stocks across rate sensitive sectors such as NBFCs, real estate, and automobile sector.
The take coming in on the markets, but let's also have a look at some of the movers and shakers in today's trading session. And two of the counters that have made their entries into Sensex 30 are rather buzzing. And Kunal, just wanted to have your take on BEL and Trent, because in this particular news flow, there's a chance that the passive inflow can actually come in both of these stocks, and that is indeed taking the stocks higher. But technically, how are the stocks placed in? Is today's move backed by good volumes?
Yeah, it's been backed by decent volumes for both BEL as well as Trent, and both of them are different charts altogether. BEL has been enjoying its steady uptrend over the last many weeks and months. The stock formed a bottom closer to that 250 mark, start of the month of March, end of February 2025, and from there the stock has now crossed levels of 400 plus. So it's trading at 420 mark, which means it's a very good recovery for a stock like BEL from those 250 levels to 420, by a margin of more than 50% kind of a rally for the stock price. But then I think what matters over here is the likes of Trent, which has also made a very strong comeback. And if you look at the last 3 to 4 months of chart, the stock price had seen a lot of badgering. We'd seen the stock falling down to 5,000, sub 5,000 levels also. But the way the stock has recovered in the last few sessions, volumes making a comeback. Now I think at 6,000 plus levels, the stock is also nearing a break of its 200 moving average. So a lot of positives emerging for a stock like Trent at current levels. And we know the history of the stock price, that whenever the stock gathers momentum and regains its beta nature, we've seen historically that the stock has capacity to move even in periods of 10 to 15% consistently for weeks. So I think in that sense, we may probably expect that the same behavior for Trent may come back pretty soon. I would believe that it's a good zone for traders to start accumulating both of these names, BEL as well as Trent.
On the technicals for BEL and Trent, but while the BSE Sensex reshuffle has become effective from today, you have Trent and BEL that are replacing Nestle and IndusInd Bank. Let's talk about what the estimated inflows and outflows could these stocks see potentially, and Ravinder is here with all of those details. Ravinder.
Well, as earlier, BSE has announced reshuffle of Sensex index, which will be effect from 23rd June 2025, and the Trent and BEL will enter the Sensex index with effect from 23rd June. And as per Nuvama alternate, together this addition are expected to trigger a $708 million in passive inflow, and BEL could receive $378 million, and Trent could receive an inflow of $330 million. And while Nestle India and IndusInd Bank will exclude from Sensex index, and Nestle India is likely to see outflow of $230 million, and IndusInd Bank may see outflow of $145 million. And among other changes, Ultratech Cement will see a marginal weight increase with estimated inflow of $4 million. Meanwhile, HDFC Bank, Bharti Airtel, Reliance Industry, ICICI Bank, Infosys, Sun Pharma, L&T and ITC are expected to see a minor weight reduction, possibly resulting in the limited passive flow, whereas HDFC Bank reduced weight in the BSE Sensex will result into outflow of $46 million, and it is followed by the Bharti Airtel, which will report outflow of $45 million, and L&T weightage reduction in the Sensex will set to result in the outflow of $14 million, while ITC and TCS outflow are estimated at $13 million and $12 million respectively.
All right, thank you so much, Ravinder, for getting us all those details. So yes, on the back of this news flow, at least two of the counters on the Nifty 50 side, they are buzzing in today's trading session. But one such stock from the metal pack, and that is Hindalco. That is also doing pretty well. The stock is holding on to the gains of 2%, and that's been the case throughout the day. And Kapil, just wanted to have a chart check by you, because stock like Hindalco has been holding those levels of 650 rupees. What do you make out of it?
In the past couple of days, the metals sector's momentum has remained a kind of the back and forth. Means a couple of days they have moved up, then couple of the days they have moved down. But within that particular pack, the non-ferrous segment that we see, like in aluminium, zinc, and copper, we have seen some sorts of a structural momentum. Yes, in zinc, we have seen a very strong round of the profit booking, but aluminium and copper, they have maintained the momentum. And coming to the Hindalco side, stock on a broader scale has remained in a one range. On the lower side, the stock has taken the support at the 630 level, and on the higher side, the stock from past couple of weeks facing the resistance at the 670 level. Still, the underlying tone is a sideways to a positive, but to gain the momentum, we will see that if stock sustains above the 670 level, and above the sustainability 670 level will attract the further buying.
So that's the take on some of those metal counters. But Sunny, what's your take on IT? We've seen a big trigger coming in terms of Accenture numbers, and we've seen the ripple effect on Indian IT. IT as a pack has been surging since a couple of trading weeks. We've seen sector churn positively impacting IT. Now with this downfall that we've seen, do you believe this is the beginning of the correction for IT, or today is just a one-off on the back of this Accenture news flow?
Again, coming to IT, if we take a step back during the March quarter results commentary, we have seen that most of the management were not very clear in terms of the growth outlook because of the uncertainty pertaining to trade war or geopolitical tension. But now, with a trade deal between US, China, or for that matter, any other countries are on the, and we believe that the uncertainty has reduced significantly, and that has been backed by the strong set of number by Accenture, especially for BFSI as an sector. So there we have seen a kind of 13% growth, which predominantly contribute majority of the revenue for frontline IT companies which are based out of India. So I think at least the worst is behind us as far as IT sector is concerned. So basis the commentary of management on the demand environment in upcoming result season, I think the stock selectively should start outperforming the larger pack. So if I have to choose few of the names among the IT pack, the few stocks which are on our radar, one among the frontline is SCL Tech. So there we feel that SCL Tech can outperform its peers. Tech Mahindra, there we can see a continuous improvement in terms of numbers. So that's the kind of turnaround story as far as frontline IT pack is concerned. Among the mid-sized player, Coforge, which is backed by a very strong deal wins recently. So Coforge is the one stock which we like. And another stock which we like, which is likely to post a kind of double-digit growth, is First Source Limited.
All right, so those are the top bets when it comes to the IT pack. Let's watch out for that. But just a few minutes left for the markets to shut shop, and let's also get you some of the BTST or STBT ideas from our experts then. And Kunal, you go first. Tell us which is the stock making to your list.
So two buy calls focusing on large cap names. BPCL is the first stock which I would suggest as a buy. I think this could be a good time where many of these OMCs could actually make a very strong comeback. We've seen that these stocks have been a lot more resilient. BPCL is one of them. Would look out for targets in the range of 325, stop loss at 307. And Eicher Motors from the auto pack is another auto name other than the likes of Escorts, etc., which is looking very attractive at current levels. So the stock is confirming a breakout above 5500 mark. So would keep 5460 as a stop loss and targets on the upside as 5700 for Eicher Motors.
So a couple of stocks that Kunal is liking right now, BPCL and Eicher. Kapil, what about you? What's making it to your radar? What are some BTST trades you would recommend?
In today's session, we are seeing that the CPSE sector has gaining some sorts of momentum, and out of the CPSE sector, the NHPC showing some sorts of traction. Today is up by more than 3%, trading in an 85 level. So expecting that if this particular momentum can spill over in the coming sessions, and the upside momentum can be up to the 87 level, and on the lower side, 84 level will be the stop loss.
Okay, so that's the take on NHPC. But Kunal, coming to you, since morning, I've been meaning to ask you this. You've been very positive on auto stock since the morning. Now, the kind of sector churn we saw with IT, do you think auto is another IT in the making now?
Yeah, so this generally happens, Srini, because initially when a move has to start off for a sector, there are few leaders which emerge as a breakout candidates. They take the charge up front, and then follows many of the other underperforming stocks, which eventually makes a comeback. Now you look at the composition of stocks within the auto pack which have made a very strong comeback in the last few days. You've seen M&M coming back to the 3,000, 3,100 mark. The volumes in the last 2-3 days was nothing short of exceptional. Maruti has made a very strong comeback, about 12,000, 12,500 mark. Eicher Motors is another name which has made a very strong comeback. And then you look at the underperformers, relative underperformers as such. You've seen Escorts, TVS Motors, even these stocks have started to show signs of strength. So that's a very strong indicator that we are looking at a strong relative strength building up into the auto sector. And this was the only sector which has been an underperformer as such from a zone where many of the other sectors had actually outperformed. So there was a point where the auto stocks would start to diverge with the initial performance and then converge with the markets. I think we've hit that zone for the auto pack, and that's why I would believe that over the next few days, weeks, you might see many of these auto stocks potentially making maybe new swing highs, or some of them even capable of making new 52-week highs for themselves.
All right, so quite bullish on the auto pack. Let's watch out for that. Yes, of late, on the back of select news flow, two-wheeler counters are definitely feeling the heat. But let's wait and watch that whether or not we are in to see some substantial recovery. But all in all, it's been a decent day for the markets because of we have seen decent recovery for the benchmark indices. The broader markets have been participating for the majority part of the day, and select counters have been doing well. But within the PSU pack, what I can see is that in the last 30 minutes or so, stock like Coal India is also showing an up move. Other than that, it's Bajaj Finance that has finally made into that list of gainers on the Nifty 50 side. But another pocket that has been doing pretty well is the whole wire and cable segment, because stocks like Polycab, KEI, they have been buzzing around since the start of the day. And Kapil, any such stock within these two which is still looking good to you on the charts, backed by good volumes, and would you recommend a BTST or STBT trade? Kapil, this question is for you. I guess you have to unmute yourself.
It's an unmute.
Okay, now we can hear you.
Am I audible?
Yes, now we can hear you. Please go on.
So yes, Polycap means yes, today it has picked up the momentum and up by 5%. But overall, I find that the stock is near to the resistance point, so not to chase the momentum into the Polycap. But looking at the KEI, so where there is some sorts of a fresh upthrust is happening, so I prefer the KEI more than the Polycap. And in the KEI, 3755 is the current level. And if we have a shorter term view, it can have the potentiality to move up to the 3980. Maybe we have to hold a couple of days position in this particular stock, but KEI looks better than the Polycap.
Okay, so preferring KEI over Polycap, that's the take coming in on the entire wires and cable space. But Kunal, as we are wrapping up, last few minutes left of trading session, give us some sense of what we can expect tomorrow's trading session to look like. While we have seen green on the broader end, can we expect to see green on the benchmarks tomorrow?
Yeah, I think we should be, because I think now we could be at a point where the global markets would start to turn positive. Now, if that happens, that's going to have a positive effect to our markets, pretty soon. Over the last many days, we've seen GIFT Nifty trading with a negative bias purely because of the fact that the global markets and the weight of news flow was not into the positive side for our markets. But I think if that starts to trickle into the positive side, you may pretty soon expect the index to also come back into a breakout mode. So I think what we've been doing over the last few days is just to try and be as strong, as resilient, as mature in terms of trying to absorb the news flow surrounding the geopolitical side, and then still remaining to a range. Now, the moment the market gets a whiff that this news flow would start to abate, as well as the negativity would start to reduce or ebb off significantly, that's the time where the markets would start to anticipate and get back into a breakout. So I believe that potentially over the next few days, we should be heading towards that kind of a breakout levels, provided we see those global markets starting to look a lot more attractive and heading to those individual breakouts for themselves.
All right, so that's the day coming in on the benchmark indices, hoping for a positive day coming tomorrow, given the fact that the global markets also turn positive. But yes, on the future front, we are seeing that happening too. But before we should shop, just wanted to have a take coming in on Dixon Tech, because Kapil, on the fundamental side, we always touch upon the kind of higher valuation that Dixon Technology commands, but there's been no stopping for this particular counter as well. See the levels is holding above that 14,000 mark. What do you make out of it, and where do you see the stock headed?
Basically, in the overall trajectory of the market, the one particular sectors that we have seen that they have remained under a little bit pressure, that is in the consumer durable stocks. But within the Dixon, there was a positive trend. But right now, the way I'm seeing the price momentum and the slopes of the short term to long term moving averages, they are getting some sorts of a flattishness. So I will prefer to have a little bit more clear setup the way the Dixon is showing right now. So I will be under the wait and watch mode under the Dixon to gain a little bit more attraction. Above the 15,000 level, we may see some sorts of breakout, but I'm a little bit conservative at this particular point on the Dixon.
Okay, so that's the take on Dixon Tech. But as we wrap up, and Sunny, before we let you go, any final comments that you would like to share with our viewers on where you see the markets headed in the near term?
Yeah, so we continue to remain constructive on market and stand by our stance of buy on deep. And again, in terms of sector where there is an opportunity, obviously the top picks remain NBFC. So a non-banking financial services company focus on housing finance as well as vehicle finance and MSME pack. So these are the three packs where we are bullish on. Coming to auto, again, tractor as well as two-wheeler pack is the place to be in. At the same time, auto and there are many names which are likely to perform well over the period of next 4 to 8 quarter. So those are the few names which one can add. Another one theme which we are bullish on is a recycling theme. So within recycling theme, if somebody want to add in his portfolio, that can be one theme one can look at in an overall in the current deal. But again, we continue to remain constructive as far as the short to medium term horizon is concerned.
Okay, well, moving away from that, thank you, Sunny, for that view. But given the geopolitical tensions, where is the market heading? Will the tariffs deadline be extended? We caught up with Aman Chauhan of Abacus Asset Manager LLP this morning to decode just that. Let's go across and listen in.
What has happened in the last year and a half, there have been some issues like this, and the recent geopolitical issue where India and Pakistan are also involved. People have bought on the dips, and that has helped them, that has worked for them, right? I think the same thing is happening here. We all hope these things don't escalate, but if it escalates, I don't think market is prepared for it. We can see a deeper correction if things go out of hand or get ugly. Markets are poised saying that there will be some announcement ahead of the 9th July deadline, and there will be further countries which will be getting into, you can say, concrete tariff discussion with US and conclude on that. I think the risk there is things can get delayed. The way things are right now, there's not much of progress that we have seen selectively with respect to various countries that are in right now negotiating with US. And I believe US also has got distracted on in the Middle East. So there can be a further, you can say, pushback to the deadline, and that should be neutral for the market, I would believe.
All right, Kapil, Kunal, and Sunny, thank you so much for joining us on this edition of Closing Trade.